So the payroll example of employee pay. You are now ready for the payroll example. So let's stay with our $1,000 a week salary pay. So the 7.65% Social Security is withheld, equaling $76.50. 7.65 times 1,000 makes sense. Based on your desired withholdings, you're having federal and state withheld of $200.50. You are also a member of the union, so you're having union dues withheld of $13 per paycheck. So let's look at the employer's balance sheet and income statement before we pay you. So let's assume nothing else is happening, so there's nothing on the income statement. On the balance sheet, let's say they've got $2,000 in the bank account made from prior retained earnings. So that's our simple balance sheet for the employer. Assets equal liabilities and equity. So now let's go ahead and pay you. So you get your pay stub. It's got your $1,000 gross pay on it, less the FICA withholdings of $76.50, which we can look up above and see that. The federal and state withholdings that you've requested by filling out your payroll paperwork, that's $200.50. And then you've got that union dues of $13. So your net pay is going to be $710. The accounting entry then will be a debit to salaries and wages expense for the whole $1,000, and will record on the employer's books FICA taxes payable of $76.50, a withholding taxes payable of $200.50. We'll put in that union dues payable of $13. And finally, we'll assume that we're figuring out the payroll on a Thursday. We're going to pay it in cash on Friday. So we're going to record that as wages payable. If we're in a business, and I've seen this internationally, where people will pay cash also for wages, so it might be a cash entry also. So just something to keep in mind. But for this example, we're going to use wages payable. Let's see what happens to our income statement and balance sheet after we record this entry. So first off, our income statement is going to change because we're going to see the $1,000 expense now. So that gives us a net loss of $1,000. And as far as our balance sheet goes, we haven't had to do anything with cash yet. So the asset side stays the same, but we're going to record all these liabilities. So we got our FICA payable for $76.50, our withholding taxes payable for $250, our union dues, and then our wages payable. So that is all our liabilities. So when we bring over our $1,000 loss on the wage expense, you'll see that our liabilities and our equity added together equal $2,000, and we're in balance with our assets of $2,000. So that's how our financial statements look after the accounting entry for the payroll. Well, you were done with the payroll entry. Now it's time to move on to the employer payroll tax entry for your $1,000 payment. So the employer share of Social Security is 7.65%, equaling $76.50. Right? 7.65 times 1,000, $76.50. Your FUTA, or federal unemployment tax for the employer, is 6%. So the employer is going to have to pay 6% times 1,000, or $60 in federal unemployment tax. Let's say their SUTA tax is 3%. So they're going to calculate 3% on the 1,000, or $30 for state unemployment tax. We'll bring over what our balance sheet and income statement looked like after the payroll entry, and we'll see how it changes with the payroll tax entry. So the accounting entry is going to be a debit to our payroll tax expense for $166.50, and that's simply adding the $30 in SUTA, the $60 in the FUTA, and the $76.50 in Social Security tax. The credit is going to be the FICA taxes payable for $76.50, and the unemployment taxes payable is going to be credited for $90, which is the FUTA plus the SUTA. You know what? Let's also cut a check to the employee and get rid of that wages payable. So we're going to debit our wages payable, and that liability will go away, and then we'll write a check, and that'll reduce our cash to $710, or by $710. So let's see the effect on the income statement and balance sheet. So now the income statement, we're going to see that payroll taxes expense of $166.50. So the total net loss is $1,166.50 for that payroll. On the balance sheet, We'll see our cash go down by the $710. It's no longer $2,000 now, it's $1,290. Our $7.10 is out there. We'll see our FICA payable actually doubled. It's $76.50 for both the employee share and the employer share, so it's $153. It's going to be owed to the government. We see our withholding taxes payable of 250 cents, and that stayed the same. Our union dues payable stayed at $13. That stayed the same. But then we've got our unemployment taxes payable for $90. And you'll notice that our wages payable went away. So we bring over our net income into our equity section, and you'll see that our total liabilities and equity equals $1,290, which ties out to our assets. We are back in balance, and that's what our financial statement would look like after one paycheck for the payroll expenses and the payroll tax expenses. So in summary, your $1,000 salary, you actually received a check for $710. The expense to your employer was $1,166.50, and that difference of $456.50 will go to the government, or in this case also $13 to the union. I hope that overview helps you understand payroll-related liabilities a little bit better. Remember to like this video and comment down below if there's something else you'd like to see or hear about accounting. And please subscribe. Until next time, this is Professor Hungerford. Have a great day.